Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So I'm going to start a new topic in the subject Managerial Accounting. The topic is Standard Costing and Variance Analysis. So in this video I'm going to explain you the complete theoretical part of this topic, Standard Costing. What is the meaning of the term standard cost, standard costing? Then differences between historical costing and standard costing, budgetary control versus standard costing, what are the similarities, what are the differences, then advantages, limitations of standard costing, then where this standard costing can be applied, applicability of standard costing, and what are the prerequisite or steps to be taken in order to implement the standard costing. Next, I'm going to explain you about different types of standards. Lastly, I'm going to explain you about analysis of variance analysis. So, watch this video till the end, because in examination you may get a theory question regarding this concept: standard cost, standard costing, budgetary control, advantages, limitations. All these things will be asked in theory question. So don't ignore this video, because it will be very much helpful not only for attempting the theory question but also in doing the problems in the coming videos. So right now I will start the meaning of the term standard cost and standard costing. Before that, already in the earlier videos I have discussed about the historical costing and also about the marginal costing. Historical costing is a costing which is applied when the cost is already incurred in the past. The costing or recording of cost after it has been incurred. So first the cost is incurred, afterwards we are recording the cost in order to find out the total cost, in order to find out the profit. This type of costing is called historical costing. Secondly, marginal costing. Marginal costing is a technique which is used, which will facilitate in fixing the selling price by differentiating the cost between fixed cost and variable cost. But these two types of costing technique, that is historical costing and marginal costing, will not be of much help in controlling the cost. So for controlling the cost, this standard costing is very useful. In simple words, I will say standard cost is a predetermined cost. The cost which is calculated before incurring the cost. The cost which is calculated in advance, that is called standard cost. This is a brief discussion about the introduction to standard costing. Now, standard cost and standard costing. The meaning of standard cost is, it's a predetermined cost. The cost which is calculated in advance. Before incurring the cost, we will calculate the cost. We'll estimate the cost. That is called standard costing. When we actually calculate the standard cost, the technique of calculating the standard cost, the technique of calculating the standard cost for every element of cost, it is called standard costing. The standard costing includes the calculating of standard cost of every element of cost. Next, standard costing versus historical costing. What are the differences between these two? First one, after incurred, before incurred. Historical cost will be calculated after incurring the cost. For example, during the whole year the cost is incurred on material, labor, overheads. All the costs are already incurred during the year. After incurring the cost, we are recording in order to ascertain the cost, in order to find out what is the total cost of production we have already incurred. This type of costing is called historical costing. Standard costing means we are calculating the cost in advance before incurring the cost. For example, next year we are planning how many units of product we are going to produce, how much material we require, how much labor we require, how much overheads are required. So these are the things we are recording in advance. Before incurring the cost, we are recording. It is called standard costing. Second one, standard cost wider scope. That means if we compare the scope of costing, the historical costing scope is very limited. because already what we have incurred, that we are recording. Why we are recording? To ascertain the cost of production. The scope is very limited. Simply we are recording the cost to find out the total cost of production. That's it. Whereas standard costing, the scope is very, very wide, because first of all we have to estimate the cost, predetermine cost. We have to estimate the cost in advance by applying the technical specification, by conducting engineering studies. All these things scientifically we are calculating, systematically we are calculating. So it is not, the matter is not ended simply by calculating the cost. After estimating the cost, we have to compare the actual cost with the standard cost to find out the variance. After finding out the variance, we have to analyze the variance and find out why this variance is occurring. Particularly, we have to focus on those variances which are adverse. So the scope of standard costing is very, very wide. Next comes historical costing, ascertainment of cost, whereas standard costing measures efficiency. So if you see the scope of historical costing is simply to ascertain the cost, whereas standard costing, the scope is efficiency. By implementing the standard costing, the efficiency of the operations will increase. Next one is historical costing, postmortem costing, whereas standard costing is controlling the cost. The purpose of historical costing is to ascertain the cost after it has been incurred. So that's why historical costing is called postmortem costing. Because the postmortem will be done only when the person is no more. After expiry only, that means postmortem will be conducted. Similarly, here historical costing will be made only after incurring the cost. So we cannot be able to control whatever had happened, that's all. We got a loss, over. We got a loss, we can't do anything. So that's why historical costing is called postmortem costing. Whereas standard costing is a costing which is there for controlling the future operations. Next one, historical costing is valid only for 1 year, whereas standard costing is valid for multiple years. When we make the historical costing, it is only for 1 year. Last year, whatever we have incurred the cost, we will record it only for 1 year, finished. That historical costing utility is over. But standard costing, once it is implemented, it will go for multiple number of years, provided the conditions should remain same. So these are some of the differences between historical costing and standard costing. Now, budgetary control and standard costing. One more technique is there for planning and controlling. That technique is called budgetary control. There are many similarities as well as differences between budgetary control and standard costing. First of all, meaning of budgetary control: a budget is a plan of activities. A budget is a plan of activities which are to be performed in a future period of time. That means what we have to do in a future period of time, we are making a plan, and that plan is called budget. Standard costing is the cost which is to be incurred in future. So the both are focused on future. Both have the objective of planning. So these two, budgetary control and standard costing, are very, very similar but different. That means it is having similarity as well as difference. So next one is, and one more thing, you should not think that budgetary control and standard costing are substitute. They are not substitute, they are complementary. So if you want to successfully conduct your business operations, both should be implemented, budgetary control as well as standard costing. There is no link between them, but to make the standard costing successful, we must have some budgetary control. To make the budgetary control successful, we need some standard cost. That means both are dependent on one another. So if you want to successfully conduct the operations, you should simultaneously, complementary, use budgetary control and standard costing. Next comes similarity between budgetary control and standard. These things will be asked in examination in theory question. That's why I am explaining. So after watching this video, after listening the lecture, you will get some points and you can confidently write in examination regarding this theoretical part. of the standard costing. So what is the similarity between standard costing and budgetary control? First similarity, predetermined standard for both. That means for budgetary control and standard costing, both are related to future. So budgets are prepared prior to a defined period of time, and also standard costs are prepared prior to a defined period of time. So both are prepared before a period of time. For example, next year what we have to do, what we have to incur, how much cost we have to incur, how much revenue we are getting, all these things we are planning in this year itself. That is a similarity. Second one is both attempts to determine cost in advance. Whether it is budget or whether it is standard cost, both are related with ascertainment of cost in advance. Next thing, both are applied for planning and controlling. Management's main function is planning and controlling. So this budgetary control and standard costing both will help the management in planning and controlling the activities. These are the similarities between budgetary control and standard costing. But what are the differences? Now differences I am going to explain you between budgetary control and standard costing. First one, budgets based on past costs, standard costs are planned cost for future. Budgets are prepared according to past performance. So simply budget is a technical matter. Simply previous year's data we are using to make the projections for the future. Simply budgets are very easy to prepare because only we are taking the past data and making the future projections. But this standard costing or planned cost for future will not only take the past experience, but also we expect what are the changes that are going to take place in future. That is the first difference. Second one, budgets are based on existing level of efficiency, whereas standard costs are set by management standards. Management standards of efficiency level. Management has fixed that this much efficiency level we need in so and so activities. So standard costs are prepared according to management set standard, whereas budgets are prepared only for existing level of efficiency. Whatever level of efficiency existing is there, in order to attain the same level of efficiency, we are preparing the budget. But standard costs are prepared according to the standards fixed by the management. Next one, budgets include both incomes and expenses. One more difference between budgetary control and standard costing is budget is prepared for all the items: income, expenditure, profit. When we calculate both income and expenditure, we can get the profit. So we can make the budget for incomes, we can make the budget for expenditure, and also we can make the budget for profit, whereas standards are made only for cost. Only for cost. Next one, this budgetary control is concerned with totals, whereas standard cost is applied for individual. One more very important difference between budgetary control and standard cost. Budgetary control is a study of aggregates. It will take the totality, total view, whereas this standard costing will deal with individual study. Individually, each and every element of cost, we make the standard cost. That is the difference. Budgets projects financial accounts, whereas standard cost project cost accounts. Normally, budgetary control will be applied using the financial data. By using financial information, budgets are prepared, whereas standard costs are prepared according to the data of cost accounts. So these are some of the differences between budgetary control and standard costing. Next comes the advantages of standard costing. Very frequently in examination, they will ask you a theory question regarding what are the advantages of standard costing. Many advantages are there. That's why this standard costing is more frequently applied in many organizations. Now, first, yardstick of performance. This standard costing, first of all, the biggest benefit of standard costing is it's a measure of performance. Time to time, we have to evaluate the performance of different departments, different cost centers. So how to evaluate the performance? By comparing the actual performance with the standard performance. So before an activity is performed, we will set the standard. Now when actual activity is conducted, we can be able to compare the actual with the standard to see whether the current performance is going according to standard or below the standard. So it's a yardstick, it's a measure of performance measurement. That is the best advantage of standard costing. We can evaluate the performance of different individuals, different departments if we keep standard costing. Second one, facilitate management by exception. See, the management time is limited. The management cannot focus on each and every minute activity of the business. The management will focus only those strategic items which needs the attention of management. So by using this standard costing and analysis of variance, we can get which are the variances, adverse variance. By seeing the adverse variance, the management will focus why this variance is adverse. Is it controllable or uncontrollable? If the variance is occurring due to controllable part, then the management will take some necessary precautions, measures to control that. So management by exception. That means management can focus only on those areas which require the attention of management. Next, simplification and standardization of production methods. By making standards, we can standardize the process. We can standardize the production methods. So everything will be decided in advance if we implement standard costing. Next one, assess the preparation of budget and forecast. See, both are interdependent. Budgetary control and standard costing are interdependent on one another. So if you want the best of budgetary control, you must have standard costing. If you implement standard costing, you can make a good budget which is attainable. So budgets are dependent on standard costing. Next one, simplifies inventory valuation. See here, inventory valuation is a very important or critical aspect of any business. So every business has to value how much is the inventory, how much is the value of inventory in the stock. So there are different methods. One of the method of inventory valuation is standard cost. In this standard cost, if standard costing is applied, then we calculate the value of inventory according to standard cost fixed by the management. So there is no need for recording the different prices of the inventory items, because the amount is fixed, the standard cost is fixed by the management. Simply we want quantitative information. How much is the quantity of material in the inventory, in the go down? Simply after finding out that quantity, multiply with the standard cost given by the management. We can get the value of the inventory. That is the advantage. Last, guides to fixation of selling price. So one of the very important part of the management is fixing the selling price. So if we implement the standard cost, easily we can fix the competitive price. By fixing the competitive price, the demand will be more as well as our profitability will also be more. If we keep a remunerative price, a reasonable price, the price fixation is also helpful by using standard costing. These are the advantages of standard costing, but the standard costing will also suffer from some limitations. There are some drawbacks. What are the limitations here? First, setting standard cost is difficult task as it involves technical skill. Remember, standard cost is not just an estimated cost, just a rule of thumb or just by guesswork. We cannot find out the standard cost just by guesswork. It includes technical skill. It's very difficult to calculate the standard cost because standard costs are predetermined cost based on technical estimate under the prescribed set of working conditions. So standard costs are predetermined cost based on technical estimate and under prescribed set of working conditions. So it's not an easy job to find out the standard cost. It requires a experienced, perfect technical skills. Next one, revision of standards. See, time to time the conditions are changing. The conditions are completely volatile, dynamic. In such a situation, if we make a rigid standard, it will not be attained. The purpose of standard costing will be lost if we make a rigid standard. So time to time the standard cost should be changed according to the changing circumstances. That is the limitation. That is the limitation, because the future is completely uncertain. The future is completely dynamic, volatile. So if the conditions change, the standards must also be revised. That is the limitation. Next one is adverse. Adversely affects the morale of employees, the workers. When we put the standard, for example, if very strict standards are implemented on the workers, then workers will become frustrated. The morale of the workers will come down because they are forced to perform according to the standard. So there is a possibility, there is a chance that the morale of the workers may come down if we strictly implement standard costing. Not suitable for job costings. One more, limitation of standard costing is this standard costing is not applicable in every form of business organization. In every form of business organization, this is not applicable. There are some industries which apply job costing, contract costing. In this job and contract costing, every job will be a peculiar one. The production is not standardized, not repetitive in nature. So in those industries which apply job costing, it will be difficult to apply this standard costing. Otherwise, they can apply standard costing, but every job separate standards has to be prepared. It will be difficult. Next one is expensive for small concern. Job costing involves expenditure to be incurred to calculate the standard cost, to keep all standards. So small organizations cannot afford to implement this standard costing. But if you compare the limitations with advantages, advantages far exceeds the limitations. So there are more advantages than limitations of this standard costing. Now, applicability of standard costing. Standard costing, where it will be applied. It will not be applied in every form of business organization. It will be more applied during process industries. Normally, in process industries, where the goods are produced in different stages, in different departments, everything is standard. The products produced are homogeneous, same, identical products, identical processes. So in case of process industries, this standard costing is suitable. Secondly, method of manufacture are repetitive. This standard costing will be useful only when the work is repetitive. Repetitive means same type of work is continued. Next one, textile industry, service industry like transport, gas, electricity, automobile industry. These are the industries where this can be successfully implemented. Now, steps involved in standard costing. Before implementing the standard costing system, some steps have to be adopted. Some points have to be considered. The first point, sound organizational structure. The organization structure should be clearly defined. The authority responsibility relationship should be clearly defined. The production method, the processing, everything should be clear cut. There should not be any chaos in the production. Secondly, sound technical and engineering studies. Because standard costs are based on technical estimate. So sound technical estimation, sound engineering studies should be there to calculate the standard cost. The next one, standardization of functions. The activities, the functions should be standardized. That means before the work starts, the procedure of production, the procedure of performing the activities should be clear cut. Next one, establishment of cost centers and assignment of responsibilities. There should be clear cut cost centers. Cost centers is a unit on which costs are incurred. The responsibilities and cost centers should be clearly defined. Apart from that, the period of standard cost should be defined, and recording the standard cost, actual cost, comparing the standard and actual, finding out the variance, analyzing the variance, and taking corrective action on those variances. All these are prerequisite for implementing standard costing. Next comes types of standards: basic standard, current standard, ideal standard, normal standard. 4 types of standards are there. First, basic standard. Basic standard is a standard which is made for a long period of time, just like straight line trend. It's a long-term standard. It's the standard which is meant for a long period of time. That is called basic standard. The current standard will be made from basic standard only. Current standard is a standard which is made only for 1 year. For the current operational activities, current standard. That means the standard which is made only for 1 year is called current standard, for the current working conditions. Next comes ideal standard. Ideal standard is the perfect standard, where everything goes 100% efficient. But this ideal standard is only theoretical. We cannot make a standard which is perfect in every sense. We are expecting that labor is working efficiently, 100% efficiency of labor, 100% efficiently utilization of material, 100% efficiently utilizing the machinery, facilities. Everything is 100% efficiently utilized. At that time, what is a standard? That is called ideal standard. But this is only a theoretical concept. In real practice, we cannot attain this ideal standard. Next, normal standard. A standard which is made on average working conditions. Average working conditions over a future period of time, which should cover one trade cycle. Should cover one trade cycle. This is called normal standards. In this way, 4 standards are there. So I have completed the topics on meaning of standard cost. It's a predetermined cost based on some technical estimate on the current working condition, prescribed working conditions. That is called standard costing. Estimating the standard cost and implementing the standard cost is called standard costing. The technique of ascertaining standard cost and implementing standard cost is called standard costing. Then I have explained you differences between historical cost and this standard cost. Then budgetary control, similarities, differences, advantages, limitations, then applicability of standard costing, and next thing is steps involved in implementing standard cost, types of standard cost. So still we have to continue the next part, that is analysis of variance or variance analysis.